I agree, and it's funny because I analyze macro, but I also am involved in Bitcoin venture via Ego Death Capital, and so I kind of have like these windows into both sides of this, like kind of cool stuff that's being built, but also how it interacts with macro. And it just seems like, especially outside of people that focus on this so much, most people just fall into one camp or the other. They're either technical or they're just talking about the financial decisions. Whereas like across the board, it's just so interesting. And I don't really view them as in opposition at all. I mean, there are people that are like, Bitcoin's been captured or Bitcoin has lost its cypherpunk root. But Bitcoin is what you make it. It's an open, permissionless network that works. And we shouldn't take for granted that it works, but it works and it's getting better. And, there are people that buy it and make Bitcoin IOUs and Bitcoin financial products, and, it works for them. But then Bitcoin is still a technical stack with plenty of design space, in the current configuration to still build on and use.
According to Lynn Alden, the state of the economy is on the verge of major transformation. Lynn thinks we're seeing the beginnings of a significant change in global markets due to the widening gaps between monetary and fiscal policy. Lynn's observations are essential for comprehending the path ahead, whether it is the effects of inflation, changing interest rates, or the function of assets like Bitcoin in a turbulent economy. Remember to click the subscribe button and enable notifications to ensure that you never miss our most recent analysis. Thank you, and enjoy the video.
I like seeing Bitcoiners pessimistic and arguing with each other because that's healthy. But I think when you zoom out, the network's in a great space. I think, the network has years of potential political cover. So at least less chance of attacks, including attacks against privacy, attacks against ownership, that kind of thing, at least in the US. Europe's a kind of a different beast, but there are pockets around the world where it's politically pretty in a decent place. And then the whole tech stack, that allows the tech stack to flourish pretty well. I think, the fact that Bitcoin's kind of forming this like price base above and below 100K, and 100K is kind of boring now, I think is bullish. So whether you look at potential price action, integration into existing financial structures, the tech stack, the political risks and opportunities around it, I am bullish. It's not something you want to take for granted, but I think that everything I see now, the future is pretty bright for it. And, that still takes a long time. We talked about the network effects of the dollar and the network effects of all these existing things. So never expect too much to happen in 1 year or 2 years. But looking out in the longer term, it's almost all bullish. It's a great place to work in, to be following. And I think it's only going to get better. Pretty much. I mean, that's part of Bitcoin becoming a multi-trillion asset. That's what happens if it's successful. And then the cool thing about it is that it doesn't have to lose any of its traits that existed, when it was smaller. It's still permissionless. The tech is more useful than years ago. There's more ways and easier ways to interact with Bitcoin than ever before. I mean, hardware wallets and NFC cards and things like that are better. Lightning Network is easier to use, more liquid. eCash is great. There's all these different things that work together. So it's, on the individual level, it's great. And then as these bigger entities buy into it, over time, they can dampen the volatility somewhat. Because instead of having tons of coins in Mt. Gox or FTX or, these other places, and kind of one thing can kind of blow up the market, the more distributed, the more entities that hold it, the more it can kind of remove at least some of those price shocks, and then allow people to use it as money first and foremost. And so, it can just keep seeping into everything. And, the existing global financial system, I mean, global broad money's over 100 trillion. Then you have bond markets that add hundreds of trillions more. And Bitcoin is this, relatively unlevered $2 trillion market that's just kind of growing into that over time, getting its tentacles into everything. And the way I often describe it is that it's not Bitcoin changing to get into those things. Those things are changing to incorporate Bitcoin. So it's not like Bitcoin did anything to get included in ETFs. The SEC and asset managers changed in order to incorporate Bitcoin. So they're locked in here with Bitcoin. Bitcoin's not locked in there with them.
Yeah.
And that's how I see it for the next several years.
Using Bitcoin as a reserve asset, I think something like that is necessary to develop that confidence.
Yeah, and I think, one of the biggest trends overall is that there is mandated capital or walled garden capital, which is to say there are really big pools of capital that have a specific purpose. It could be that they're a stock fund and they buy stocks, and you're a manager that buys stocks. There's bond funds, there's credit funds, there's real estate funds. There's all these different types of entities that have kind of a specific mission. And if you happen to work in that industry and be a Bitcoiner, like you're bullish on Bitcoin, long-term, structurally bullish, but you work in buying stocks, buying bonds, buying credit, buying real estate, then one of the cheat codes you can do is incorporate Bitcoin into what you're doing. So if you're bullish on stocks and you say, well, this stock is buying Bitcoin with kind of smart leverage. So if I want to outperform other stock managers and I happen to get Bitcoin and say most of them don't, I can buy the companies that are buying Bitcoin. Similarly, I can buy their bonds that have a Bitcoin component to them. If I'm in credit, I can see how Bitcoin can fix credit or give a price kicker to credit. If I'm in real estate, I can look at real estate tied to Bitcoin. And so basically, it's this kind of like way to slip into all these different kind of walled garden types of capital. And I don't view that as competing with the cyberpunk aspect of Bitcoin. Part of what makes Bitcoin successful is just being large and liquid. So the more entities that want to use it, the better, as long as those ways don't get in the way of individuals using Bitcoin in self-custodial, permissionless ways. So I think there's a bunch of different problems that Bitcoin can solve, from small to the big, and they're all kind of happening together. And individuals have their own backgrounds. They find certain things more interesting than others, but basically whatever skill set or experience someone has, they can bring it to the Bitcoin network or bring the Bitcoin network into what they're already doing.
In order to maintain the dollar as the dominant currency in the world, the United States must transfer more dollars overseas, which typically entails importing more than it exports. This has eroded the industrial foundation of America over time. They risk losing the benefits of dollar supremacy if authorities attempt to correct this trade imbalance. Although it doesn't immediately replace the dollar, Bitcoin contributes to this image as a potential substitute by offering a neutral settlement layer independent of the political or economic goals of any one nation. Decentralizing trust in a system that now relies on U.S. supremacy is one of its benefits. Don't forget to subscribe and hit the bell icon to stay updated on our latest videos. We'd love to hear your thoughts in the comments. Now let's dive back into the interview.
I can imagine the administration's challenge of trying to communicate this because the intricacies of how trade deficits and the reserve currency kind of pair together is very wonkish. It kind of has this like academic quality to it that doesn't go over well in kind of political oriented speeches. Like I would be terrible at a political rally, for example, when I try to explain any of this. And so we kind of have this situation where, and this was outlined back during the Bretton Woods system by Triffin, as you mentioned, which is that having the reserve currency does come with a bunch of benefits. Is historically called a exorbitant privilege, but then it has certain costs to maintain it. And those costs can vary a bit depending on how the system's structured. So for example, back in the Bretton Woods era, the cost was that we kept draining our gold reserves. We basically had to kind of keep paying out our gold reserves to maintain that part of the system. And in the current formation, instead we kind of pay for it with our industrial base. We keep kind of sending out little parts of our industrial base over time to maintain the global reserve currency status. And there's a few reasons for that. One is that because unlike every other fiat currency, the dollar has all these extra demands for it by countries all around the world. All these different purposes, there's this extra demand for dollars, which sounds good on the surface. And as for Americans, for example, we have tons of import power. When we go on vacations to the rest of the world, it's, we have pretty strong purchasing power compared to when they come to the US. These things seem good on the surface, but it also means that it's pretty expensive to manufacture lower margin things here at home. And so we have this kind of situation where our imports are very strong. Our exports, especially lower margin stuff, is less competitive, whereas we can still be competitive on really high margin stuff, technology, finance, healthcare, that kind of thing. And then the other aspect is that even if you could somehow solve that, there's a more fundamental problem, which is that the whole world needs dollars for the global reserve currency status, to use it for international contract pricing, cross-border financing, one side of every trade pair that they do, all these different purposes as a reserve asset. And when you step back and say, well, how do they get all those dollars? If they're all using dollars, how did all those dollars get out there? And the answer is trade deficits. Basically, that overvalued aspect forces open the U.S. trade deficit. And every year we send out hundreds of billions or sometimes $1 trillion in net outflows. And over years and decades, these have accumulated out there. And so kind of the way it works is that if you want to fix the trade deficit, which I've been writing about since 2019, I think that's a valid mandate to do. Unfortunately, it does come with trade-offs. Some of the benefits that we enjoy at the cost of the trade deficit, if you do want to kind of fix that imbalance, it comes up, with basically giving away at least some of those benefits and prioritizing that industrial base a bit more. I agree, and it's funny because I analyze macro, but I also am involved in Bitcoin venture via Ego Death Capital, and so I kind of have like these windows into both sides of this, like kind of cool stuff that's being built, but also how it interacts with macro. And it just seems like, especially outside of people that focus on this so much, most people just fall into one camp or the other. They're either technical or they're just talking about the financial decisions, whereas like across the board, it's just so interesting. And I don't really view them as in opposition at all. I mean, there are people that are like, Bitcoin's been captured or Bitcoin has lost its cypherpunk root. But Bitcoin is what you make it. It's an open, permissionless network that works. And we shouldn't take for granted that it works, but it works and it's getting better. And, there are people that buy it and make Bitcoin IOUs and Bitcoin financial products, and, it works for them. But then Bitcoin is still a technical stack with plenty of design space, in the current configuration to still build on and use. And then especially as demand increases, we have to make more efficient use of block space, more efficient use of resources. Sometimes during periods of abundance, if fees are low and if demand is low, there's not a ton of incentive to build vertically. But whenever there is excess demand, one reason or another, it's kind of like necessity is the mother of invention, as they say. And so these things can develop, and I'm so optimistic on all the technical aspects of Bitcoin.
Lynn Alden talks about her own perspective on how Bitcoin and macroeconomics interact. She explains that she has a unique perspective on the current trends in both industries because of her work in macro research and her involvement with Bitcoin venture capital. According to Lynn, most people only pay attention to one aspect of Bitcoin, its technical aspects, or its financial ramifications, but she finds value in both viewpoints. She sees Bitcoin as something that can coexist and provide value with established financial systems rather than as something that is in opposition to them. The open, unrestricted network of Bitcoin, she notes, is still developing and getting better. Although some argue that Bitcoin has lost some of its initial cypherpunk principles, she stresses that Bitcoin is still functional and improving. It will be required to make new advances and increase efficiency as the demand for Bitcoin grows, particularly in the way it uses its block space and processes transactions. Innovation is more urgently needed when demand is higher, but there is less motivation to create these advancements when demand is lower. She thinks that this will result in fresh technological developments that will increase the value of Bitcoin. Additionally, Lynn delves into the intricacies of the US dollar's function as the world's reserve currency. To ensure that dollars are in circulation around the world, she argues, the US needs to keep a trade imbalance. Although this has benefited the US in a number of ways, such as increased purchasing power and cheaper imports, it has also caused America's industrial base to erode. Don't forget to like, subscribe, and enable notifications for more valuable content, and as always, happy investing.